Hi trader, this video is brought to you by Admiral Markets. My name is Chris and I'm going to take a look at the Forex market and see how it looks like prior to the FOMC statement on Thursday. That means looking at the euro dollar, pound dollar, dollar yen and AUDUSD. First of all though, be aware that this video is intended for a global audience and may not be suitable for everyone. Take a look first at admiralmarketsglobal.com, select your country of residence and contact an appropriate entity to find out more information about that. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only. And by continuing watching this video, you agree with this disclaimer and you're aware of the risk involved when trading. Alright, I'll start with the AUDUSD 1 hour chart. And well, it's looking rising wedge on the 1 hour with a pretty shallow resistance line with a steeper support line. And all happening target of this swing high, swing low. So if we put a fib on that very first upside, very aggressive bullish move up, retracement, that was pretty fast too, but got to bounce at the 78.650, reached the minus 272 target. So there's two things that can happen. Obviously, we can go up to the minus 60. That could be an interesting zone for a reversal. And if there's some interesting 1 hour engulfing twin, for instance, or even shorting, perhaps I might even short at the target with a stop loss probably above 72. Potentials is that it doesn't get there and it could break this rising wedge and start to fall already. So we do these tops. You look at the oscillator is failing to break the previous top to merit a bit of a break of this this rising wedge. Personally, I would not be trading that. I would rather wait for the break, the hook back, and a clear lower high here to indicate the head and shoulders pattern that could occur, and then trade the downside after this this top is in play and look for shorts in this area where I have the arrows there, the red arrows. So personally, I would be either, once again to recap, looking for shorts at the minus 61.8 target, or if it doesn't get that high, I would look for a head and shoulders pattern, basically a failure to break that top, and then trade the break of the neckline, for instance, for that continuation to the downside. I'll take a look at the euro dollar in just a second. Be aware though that we have the weekly FX recap on Monday with Nenet. On Wednesday, Nenet's going to take a look at price action, trend lines. I'm going to take a look at the trend lines too, but on Tuesday in the live trading environment, as well on strategy live trading environment on Wednesday. And Nenet and I together take a look at tackling drawdown and risk, very important obviously, on Thursday. And we'll share some interesting info there on Thursday evening. Alright, time for the euro dollar, looking at the weekly chart, and obviously this weekly chart is going to be impacted by the FOMC statement and the rate, in fact, on Thursday. And if there's no interest rate, then increase from 0.25 to probably 0.5, then in that case, the euro dollar downside might be in trouble. Obviously, this is a strong downtrend if you look at the weekly chart, with a lot of momentum riding behind it, and we're in a kind of a bear flag correction. If you look at this, these two trend lines, for instance, the fact that the price went to the 38.2 fib, it stopped there, which is classical for a bear flag. Now, if the rate hike does happen in September, which seems a bit less likely now than obviously, but if it does happen, then this bear flag could break, and perhaps the downtrend could continue, right, as it goes down to the bottom and even lower to the target. That is a very realistic scenario if there is a rate hike. If not, maybe this bear flag will continue and we could get a bigger correction. So if we zoom into lower time frames, basically you'll see that a lot is depending on that. Of course, it doesn't mean that there's no trade in the meantime. Perhaps if we look at this move down, it's actually retracing against the fib. So 50 fib is still a good bouncing spot, or 61.8. Those are good resistance levels in my opinion. In the meantime though, there is a channel. So from that point, the price could even go back to the bottom of that uptrend channel and bounce again, like it did here, for continuation of this uptrend as well. So things for look at this week as the bottom of that channel. First of all, now it's kind of in the middle, so we'll be cautious. The bottom could be a bouncing spot. If it does break below that bottom, this channel, there is a chance to retest this lower trend line, as you can see, we have the green arrow there. And there could be a bit of a bearish momentum down to that support trend line, and then again a bounce potential there at that trend line. So I would put it, if we do get the break of the channel like this, I would put the fib on that leg, and look for a bounce around the 61.78.6 fib. And until that fib, there could be potential for downside. So this bottom of the channel could be a bounce up, could be a breakdown. And then again, at these fibs, there could be bullish potential. And here, I would be looking for resistance again. All right, so these are kind of the bull-bear zones that I'm looking for on the euro dollar. There are multiple trends going on. I mean, 4 hours obviously had a good downtrend, 1 hour is up. Daily is actually, daily actually still up in a way because it's bouncing off support. So there's a bit of a mixture. Obviously, it will probably stay a bit of a mix on Tuesday, Wednesday, but I do see interesting zones where I could still trade. And then Thursday, I'm going to be cautious when the rate, of course, is announced, and then that will have its impact on the long-term charts. Now, pound dollar will have the same, of course, just like all the dollar, in fact, pairs. But just looking at the 4-hour chart, we had a very strong fall, a strong break of this trend line, and well, probably going to continue that after we correct up. So therefore, for instance, these fibs are very important in my opinion. There's confluence between the targets, the Fibonacci targets, and the Fibonacci retracement levels. Yet again, if price gets there, could be very interesting zones to look for a turnaround in my opinion. Now at the moment, it's still an uptrend channel like the euro dollar, very similar in fact in that way. So still the uptrend if it stays in that channel. So from that point of view, as long as it stays in this channel, there's that bullish potential, especially if it breaks above this resistance line. There could be that breakout potential right there, for instance, or if it maybe even goes back to the bottom. It's pretty close to the bottom already, but as long as it stays in fact above this bottom, that's a crucial bottom. Even if it breaks the channel, there could still be a bounce at that bottom basically. So I remain bullish when it stays above the here at 153.50ish, and a breakout could lead to the continuation up to the 61.8 fib. But the dollar yen is pretty simple as well. I mean, I'm looking at clear trend lines here indicating the support and resistance, and as long as price stays in between that, there could be bounce trades back to the bottom and back to the top, just like we've seen before on this triangle. So if the triangle breaks, and price could go to target. For instance, if it breaks to the upside, I would put a fib from here to here and wait for the -272 target as the main level to think about. If it does break to the downside, then I'll probably put a fib from here to here or from there, and probably look initially for the bottom to be reached. But if it does break the bottom, then maybe even the -272 target. All right, at 113. So in the meantime, you can see on the hourly chart, there's a smaller triangle. Price is challenging the bottom, perhaps even broke this trend line already. And within the triangle, it could actually be breaking to the downside, and there could be the potential to go back to the triangle. So that could be interesting. Not sure. I don't like the triangle halfway. This triangle is pretty close to the halfway mark. So rather probably wait for price to get into the support zone and look for a bounce, or if it does break, for that breakout to the downside. If it retests basically the resistance here, then same thing. Could be the bouncing spot or could be the breakout spot. So that's my vision. Pretty straightforward, pretty simple here on the dollar yen. All right, that's my vision for the beginning of this week. At least take a look at tomorrow and Wednesday to get an updated version in the live trading room, and hope to see you soon. Have a great trading week and many green pips. Cheers.